So the moment the whole crypto market is waiting for has come. We've seen this explosion higher. Realized vol has gone from like the 30s to the 70s. So that's pretty impressive as we've gone all the way up to where we touched 35K and above, but we're kind of settling in at around 34, 35.5 right now. Ethereum realized also higher, but only up to around 45. So really, not quite the same explosion that we saw in Bitcoin, playing second fiddle to Bitcoin again. Implied vols understandably did catch a bid. Now, carry's quite negative in Bitcoin, so we've seen a good uplift in implieds, but they've gone into the 60s. But realized is even better than Bitcoin. Whereas if you look at Ethereum implieds have caught a massive bid, almost as much as Bitcoin, even though the realized hasn't. So it just shows that the flows in the option markets are having impact on the implied vol in a similar way between the two assets, even though the spot price moves in Ethereum haven't been as big because it hasn't been Ethereum specific news. So people are potentially positioning in the vol market for more upside in Ethereum, and therefore the price impact in implied vol is actually happening. Okay. The front month vols were up 15 to 20 points in both assets. The weekly vols doubled. So we literally saw weeklies go from like 35 to 70, which is unbelievable for this Friday's expiry. So I do also think, I'm curious to see what the gamma sellers are going to do next, right? So a lot of gamma sellers would have been liquidated on this move, thinking, it's easy to harvest theta out of this crypto market, so range bound, blah, blah, blah. Well, it's shown you when it decides to break the range, it does it in violent fashion. So the question is, are these gamma sellers going to come back in a hurry, or are they going to be licking their wounds for a little while before they come back? That's what we're going to be watching for. I wouldn't be surprised if they're going to chill out a bit, wait for markets to stabilize and find their new level. When we have a breakout like this, I don't think you're going to find a level within a day, right? So you're going to want to see where we end up this week, how this thing is trading, find some stability, and then maybe the gamma sellers come back when they get comfortable of the new range that Bitcoin is in. But Bitcoin isn't in a range right now. It's in the middle of a breakout. So it's going to need a week or two to carve out its new range, establish those kind of bookends in that range for then people to be comfortable about selling any meaningful amounts of gamma, I suspect. Okay. That's the realized vol setup, basically. Looking at term structure, like I said, 15 to 20 volt increase in short dated vol, pretty impressive move. Really the way, short covering, people buying short dated optionality. The back end had a decent uplift, but obviously nothing like 20 vols. So we had so March was up 12 vols, next March 24, but the back end September next year was up 6 points in Bitcoin, and it was a pretty similar move in Ethereum. March up 10.5, and actually September up 7 points. So a kind of time weighted, we call it root time move, something like that. The middle part of the cut, well, not really middle, the kind of front end past the weeklies, the front end from sort of 3rd of November to this end of December this year was moving quite parallel in Bitcoin, like 22 vol to 18 vol. It was kind of all shifting up. But then as you go into like further maturities, it has this root time property where these vols can't rally quite as much, basically. Right? So very normal price action that we're seeing in the volatility surface. Looking at the relative value between Bitcoin and Ethereum, we moved deeper into Bitcoin premium, which makes sense because Bitcoin moving so much more. So we got this shift down in the surface across expiries. Kind of the 1 to 2 month area is kind of minus 10 vols. So Bitcoin trading 10 vols above Ethereum. But the realized the 10-day went off the chart. So you can see the 10-day went to like nearly 30 vols Bitcoin over. So that's how deep it was. In terms of the 30-day, it's at 9 vols, which is more in line with where the curve's trading. But the 10-day just went ballistic. So yeah, I don't think it's sustainable that the 10-day is it's going to realize 30 vols over Ethereum for a long period of time. But obviously, it was a knee-jerk move, and that's kind of what's happened. So once we find stability in the sort of 35 to 40K region, we do expect the focus to turn to Ethereum, as I said, but that might still be months away. So we don't know how this vol spread is going to behave. once the focus does start to move to Ethereum, and if it is a bit freer to move because the overwrite has calmed down, then you might start to see this spread creep back up towards neutral. But right now we're seeing 10 vols, which is a long way from neutral, and you know, the market's going to have a memory to that. So I think we need to see a few things. We need to see the call overwriters just stop doing as much size in their systematic call selling, and that's going to take supply of Ethereum vol out of the market and will improve the chances for more Ethereum realized. If we then start to see more Ethereum realized, then the vol curve slowly going to start to respond to that. But right now, it's in a bit of a state of, you know, it doesn't know where the hell it wants to go. It's all over the place. Okay. So that's what I'm seeing on the relative value side of things. SKEW's a very interesting one. So on the break higher, we saw cool SKEW exploding, as you'd expect. That's intuitive as people chase the upside. But that was kind of, that reached a peak yesterday around 4 p.m. London time. So the whole curve, and I've got that marked here on this extra chart that I've put in. That whole curve was between 6 and 10 vols for calls trading at a premium in terms of SKEW. And then since then, as we continue to rally in spot, the shorter dated SKEWs have collapsed to the point where earlier today they were at neutral. They're back to a couple of vols now for calls still, but the call SKEW completely collapsed. So what happened was the call vols didn't collapse, but the put vols kind of ratcheted higher to kind of meet the call vols. So that's kind of what I was seeing. So the SKEW collapsing when spot's going higher is quite unusual. The reason the call SKEW is collapsing is because the puts were starting to catch a bid. So I suspect people who are adding fresh longs, if they're adding fresh longs onto Bitcoin, are happy to then buy puts along with that in case something goes wrong. So there's kind of some protection bid coming as people allocate more money into Bitcoin. And that makes sense. If institutions start to buy, generally institutions are going to want to have some hedges on. So you would see put SKEW actually trade higher with spot in a world where institutions are buying, right? So that's starting to see the first kind of signs of that move. Whereas if you look at Ethereum call SKEW, it's still on the moon. It repriced higher. That's what you can see that from this curve going this way. And Ethereum call SKEW is actually trading above Bitcoin call SKEW versus where it currently is. This chart was a snapshot of kind of midnight last night, but things are obviously in flux because we're in such a fast market. But that's interesting for me to see the Ethereum call SKEW in 5 to 10 vol point premium for calls across the curve, and Bitcoin actually giving some of that call SKEW back. That's already showing you how forward-looking the options market is. And the options market saying, okay, well, now the risk of a really big move, catch-up move in Ethereum is actually higher. So we want to own that upside tail in Ethereum. And actually, we're willing to pay more of a premium for that than we are for Bitcoin, which we think might be now buy the rumor, sell the fact. A lot of the move is done. How much more has it really got in it? And that's why that SKEW is repricing. Okay. But interesting to see that happening in real time and observing that. So that's kind of my read on it. Okay. Dashboards have basically got Bitcoin off the scale in terms of spot because it just went up so much. And the vol is obviously now above median level. So selling calls can make sense. For those of you who've got the ammunition, would never sell naked calls in this stuff. You know, if you've ever watched what Bitcoin can do over the past sort of 5 to 10 years, you know, when a big bull run like this kicks off, you know, it's a brave person who's going to fade it with naked calls. I would never recommend that. You might get lucky, but it's just not a very prudent way to capitalize. That's not to say if you already own calls or you own the underlying, you can do overwriting against it. For sure, that makes a ton of sense given where vols are, but just be careful about selling naked. In terms of what the pros have been doing in option flows, we saw a massive explosion, like 85% increase in the last week. But I think that's in the last 4 hours as things got a bit crazy. Year-to-date highs. Profit taking in November calls, the 30K, the 31K calls getting sold. The December call spreads, 34K, 40K call spreads getting sold as well. But then, you know, these overwriters who've been selling positions have been covering them as well. So we saw the Nov 30 calls and the December 29 calls getting bought back in decent clips as well. October calls have been trading in two-way Obviously, that's the gamma stuff. That's all these pink bars that are trading between 30K and 34K. All those strikes are very active as people kind of recalibrate to this new regime of vol that we're in. So they have rebalancing to do and things like that. Okay, that's the flows in Bitcoin. The big flows in Ethereum, all call dominated. The flows were actually down about 25% until yesterday, and now we see a big influx of call volume coming again. Call buying flows in November, 17 and 1650 calls. And then other flows, and that looks like a short cover, a lot of that as well. Call buying as well going on in 1800s in December. Fresh longs as well as short covering from overwriters. The October 1600 calls were pretty active in terms of the front end stuff. And then there was a sole bearish trade on the board of any consequence was the bearish risk reversal November 1550 1800 risky buying put selling calls there. But like I say, not many bearish trades going up right now on the tape. In terms of gamma positioning, we'd been saying that if we broke above 30K, Bitcoin would flip shorter. We definitely saw that happen. So you can see here on this, we did briefly spike into positive gamma, but then we collapsed back into negative as spot broke over the last sort of 24, 48 hours. The big pillars are 34,000 in this Friday expiry. That's those red bars. So that's what's providing dealers with long gamma. If we continue to go higher, you're going to move away from that. That gamma is going to dissipate. Dealers might find themselves even shorter. Ethereum dealer gamma back into positive. It did briefly spike negative, but then some flows have come in and supplied some 1800s to the market in terms of Ethereum for this Friday expiry. So right now, same story. Ethereum's trading long gamma again, but it's predominantly coming from two places. It's coming from these downsides in November, 1650 to 1700 strikes in November, and these 1800 strikes in October. Again, if we were to rally, we would then move away from these strikes and we would see that gamma dissipate and we would see the position roll over again. But it's quite a long way for that position to get into short territory, which again probably means that the realized in Ethereum at the moment continues to struggle unless we really get some size buying in the spot market. The market, if anything, is still providing resistance to Ethereum, which it's not providing to Bitcoin right now. That's the summary for this week in crypto. Thanks a lot. As always, I'll catch you guys later.